Hi, welcome to the Market Alert for Friday, the 6th of January 2017. So yesterday the market fell, and unfortunately I don't have the live recording. For some unknown reason I forgot to hit the record button because I wanted to show you. I actually did it in real time, how the market reacted to the crude oil figures. Let me just bring up what actually happened. I'll try and slightly recreate it, which is going to be difficult. But yesterday the crude oil figures, I sat here clicking the button every 10 seconds to show you the figure coming through live, and like I say, it would have helped if I'd have actually recorded it. But the crude oil figures came out at minus 7.1 million barrels, which is actually bullish because obviously there's a shortfall in the stocks. And this bar here is 15:35, which is obviously 25 minutes before the crude oil figures came out. The crude oil figures came out at 1600, which is this bar here, and of course, unfortunately, get out before crude oil at the moment because you never know what's going to happen. And this actually was a bullish signal from the figures, and yet the market decided to move lower. So getting out just before these figures was a pity, but it could have actually gone horribly wrong as well, because the market could have moved up the other direction as well, which is a 42-point loss there on this signal. So the market then continued lower. Didn't expect it to go down this far, but it did. I was hoping it was going to find support here, but eventually the market came back above the 20-bar average and then started to make its way. But look how quiet it was prior to this signal, and I think objective achieved. They'd stopped the market from going lower at this time, and you can see now how the market's being brought back there. This buy signal, you can see the market filling it, and then it threw in another sell signal. And as I said in yesterday's market alert, we've already had the market move lower. You wouldn't want to try and go lower again because they're still trying to get this market to the upside. If you look back to last week, all of the sells came in the early part of the session, the market then reversing and moving back. And as I said yesterday, if you've got a situation where you've got to sell, then it's very unlikely to succeed because of the sells in the first part of the session and the market moving to the upside there. So in the daily chart you can see how sideways prices are. We've got the 76% still playing with this market, major resistance area. You can see how the market's failing to close above this at the moment. And today, hopefully, let me just get rid of this and the news. We've got the non-farm payroll figures. They're released at 1:30 p.m. This will be very interesting because this is what determines whether Yellen's going to increase interest rates again or not as we go further into January. I very much doubt she'll do it in January, probably March if she was going to, but it's certainly going to be an interesting figure. We need something to give this market a kick to send it to the upside. But then I have another theory as well. I believe that, and have already recorded a video about Trump being the fall guy for a financial calamity. So it would be foolhardy to move the market up to 20,000 so soon, as a lot of the big banks and traders would want to be short on this market. So my theory is, and it's only a theory, is they'll hold the market at this level sideways up until around the 20th or just before it, run the market over 20,000 and then get short on it thereafter. Because every attempt at the moment to take this market up to 20,000 just seems to be failing. We're struggling with the 76, let alone the 20,000. But who knows, the payroll figures may be better than expected today and just do that. But that to me seems how it's panning out at the moment, and we're only a couple of weeks away from Trump being inaugurated. It's 2 weeks yesterday, so it'll be interesting to see how that actually happens. I think it was 2 weeks yesterday. It's the 20th anyway. What is the day? 14 days from today. So that's the state of play there. You can see the market's holding, but just stuck in that sideways range there. And then on the implied volatility, 1045, only increased by 0.10 yesterday, even given the drop in the market of 150 points and then bouncing back as well. So you can see there we're still in the range where we can expect the market to make a big move at some point. And like I say, my theory is not until a few days before Trump's in or just after he's in, so that it gives the excuse then to do what they want to do with the market. Right, that's it for today. Brief and to the point. There's not a lot else to report because we're waiting for the non-farm payroll figures out at 1:30 today. Right, that's it. As ever, thanks for your support, also for watching, and I shall see you in the next one.